All right. Hello, everyone. I see people are starting to connect. We do have a few minutes before the presentation will begin, but I wanted to open it up to give people the time to properly connect into the presentation. We have a great presentation for you today. I hope you have a lot of questions prepared. Um, so we're going to give it another about 3 or 4 minutes for people to be able to funnel in, and then we'll get started. So I appreciate everybody joining, and I appreciate your patience. I see a lot of people still connecting, so I hope everybody's having a good start to their morning. Again, another few minutes for those who have just connected until we begin the presentation. Again, I appreciate your patience. Right, just another minute or so. I still see people are connecting. So I want to make sure everybody's had a chance before we kick things off within a reasonable amount of time.
We should have had some intro music going to get everybody hyped up.
I pitched that idea, but they never listen to me. I'm
We get
just
the
kidding.
theme song from the Michael Jordan Bulls going to get everybody
I could
going on this first day of August.
I could try to hum it, but it probably wouldn't be too good. All right, it's 12 o'clock. I think that's plenty of time for us to kick things off. So we're gonna go ahead and start things. Hello, everyone. My name is William Mucker. I'm a client executive with Camaplan and would like to thank you all for joining us for today's webinar, Federal Tax Credits for the Small Business Owner with Scott Jillard. As a quick note, please be aware that we'll be answering questions at the end of the presentation. However, feel free to use the chat and or Q&A function on your screen to pose your questions whenever they cross your mind. I highly recommend you familiarize yourself with the chat and Q&A section because we're gonna be taking a lot of questions today, hopefully. And before we get started, I do have to go over a brief disclosure. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I'll be more than happy to help. And without further ado, I'll pass the controls over to you, Scott.
Thank you so much, Will. I appreciate your time and help. I also want to say thank you to Joe Fulvio for inviting me to speak and putting this together. So thank you, Joe. Good afternoon, ladies and gentlemen. My name is Scott Jillard. I am the owner of Jillard Associates. I am not a CPA. I am what I consider a tax credit consultant. I am a one-stop shop for the small business owner or the professional that wants to add value to their services and make their clients aware of the federal tax credit programs that are available to them. This is typically a service that is afforded to large clients by large CPA firms, but my mother was self-employed. She was a small business owner, and I very much enjoy helping out small business owners because these are programs that are meant to make the small business more efficient and help it succeed. And there's really isn't a resource that can go over it in a concise manner and help the small business owner get on with their day. So I'll start from the beginning. Just to let you know, I am not going to bore you with a long PowerPoint. This is going to be a very colloquial presentation. I'm going to go over 4 programs that you could potentially benefit, or your clients or associates can benefit, that can add value to your service, and then we'll open it up to Q&A. What I find after doing numerous speaking engagements is that if you're taking time out of your busy day to be in this meeting, you have a very specific question, and I'd like to address that because as soon as I can answer your question, it helps spare other questions, and we can make the best of your time. So to start out, I've been helping out small business owners with federal tax credit programs since 2017. Before that, I was an insurance broker. I helped out families and individuals with health insurance plans. When the Affordable Care Act came about in 2016, it made that position pretty much a seasonal job. So I pivoted, and with my insurance license, I was able to do retirement planning. And I was introduced to a woman that owned a company that specialized in the federal R&D credit. And a number of my clients qualified for the R&D credit. I specialized in helping design build firms, construction companies, architects, private medical practices. And to get into the R&D credit, what that involves is this credit has been around, and I'm talking about the federal R&D credit. This has been around since 1981. And it was originally put together, passed by Congress, to encourage the retention of jobs on American soil. A lot of the credits that are federal tax credits and even state credits are to encourage job growth. Obviously, job growth helps the economy, it helps local economies, and those employees pay taxes. So the federal R&D credit was mainly for manufacturers to keep manufacturing jobs on American soil. But the application, the documentation, the substantiation was very time sensitive, not time sensitive. It took a lot of time, and only large firms could pay large CPA firms to take care of it for them. So it was only helping out the large companies. In the last 20 years, through the Bush administration, the Obama administration, the qualifications became more lenient to help out those small businesses. So, and then in 2017, the Tax Cut and Jobs Act affect the R&D credit, which I'll get into in a little bit. But basically, if you are interested in the federal R&D credit, your company has to be improving its processes or procedures. It has to be doing, there has to be a level of experimentation. It has to involve either biological science, physical science, computer science, and there has to be a risk-taking element to it. There has to be a potential of failure. So that's why I kind of centered on construction companies, because if you're designing a 2-story addition to a 200-year-old house, there's a lot of experimentation. Every project's different, as well as with private medical practices. Each patient is different. You're doing a lot of research before you're developing that treatment plan. So I helped a lot of physical therapists, plastic surgeons, a lot of clients that were in the private medical practices. So there has to be a level of experimentation. There has to be potential failure. It has to involve a science. There has to be, you have to have employees. A good starting point for the R&D credit would be at least $2 million in revenue and at least 10 W-2 employees. There has to be tax that's offset. The federal R&D credit offsets the income taxes for the owners of that company. It doesn't go to the business. It offsets the federal taxes for the owners.
Hey,
Now, I
Scott.
mentioned the tax cut. Yeah,
sorry to interrupt. We do have a question. Can you just emphasize you're saying R&D, not RND,
yeah,
right?
yeah. Research and development.
Okay, thank you. We just had a question come in about that.
Yes, research and the federal research and development credit. So in 2017, the Tax Cut and Jobs Act passed by the Trump administration affected the federal R&D credit. One of the ways to calculate the credit, when you actually get into it, when you find a company that qualifies, that's doing the level of research and development, the experimentation, there's qualified research expenses, and there's qualified research activities. So the Tax Cut and Jobs Act basically amortized the qualified research expenses, so it wasn't as lucrative. And this started in 2022. So for companies that are just looking into the R&D credit, what we suggest is to look into seeing if we can look back at the 100% qualification for 2020 and 2021. Almost every business did the extension of their 2020 taxes because of the pandemic. Every business had an extension. So there's still that open time period to look at their 2020 taxes to see if they qualify, and also 2021 as well. The rules changed in 2022, so we can look and see if that's beneficial. But to summarize how the rules changed, it amortized the qualified research expenses. So you're not able to use 100%, which is what you were able to use before. So if you have to be involved in R&D in the long term, because it basically doesn't benefit you or your business until 3 or 4 years down the line. So for companies that are just trying to get involved in the research and development credit, first we say, let's look at 2020 and 2021, because that's still open. And then if it makes sense long term, if you're a pharmaceutical company, if you're a technology company, if you're a private medical practice that will continue doing the R&D, we can look at this long term and see if it's viable for you moving forward. So that is the federal R&D credit. Once again, it benefits the owners of companies that are involved in experimentation, trying to improve their processes and procedures, have at least 10 employees to at least 2 million in revenue. And that's a good starting point for that credit. So as I mentioned, I started with that credit in 2017, and it was enormously successful. It helped out businesses. Clients would get checks within 2 to 4 months, the refund checks within 2 to 4 months. And then, as we all know, the pandemic hit in March of 2020. Shortly after, in early 2021, I became aware of the employee retention credit. Now, I'm going to go over this quickly because everyone's heard about it. I don't want to beat a dead horse. The half of the credit is already sunset. But the way I explain the employee retention credit, if you've been under a rock and you haven't heard about it yet, essentially, when the pandemic hit, Congress passed the CARES Act, and in December of 2020, they amended the CARES Act to allow businesses with over 100 employees and businesses that took advantage of the PPP access to the employee retention credit. Currently, what's still available is the first 3 quarters of 2021. So approximately $21,000 per W-2 employee. Now, there's the 2 most bulletproof ways to qualify for this credit are, the one is a decline in revenue based off of the same quarter in 2019. This is easily identifiable based off of your P&L. And then we just exclude PPP. And the calculations are fairly simple once that occurs. The other way is if you are affected by government shutdown. I'm in Pennsylvania, so for instance, restaurants, they were takeout only, and then they were 50% occupancy. That's a great example of affected by a government order. And this affected gyms, churches, spas, nonprofits. So it's definitely something, if you haven't looked into it, just we can take 15 minutes and look into it before it completely sunsets. 2020 is off the table, but 2021, the first 3 quarters are still available to businesses that qualify. The next credit I'd like to explain is what's called a wellness credit. This is more formally known as a Section 125 plan, but I find that name isn't very intriguing, so I'd like to call it the wellness credit. What the wellness credit is, it basically encourages companies to have a more healthier workforce, and this provides discounts on health insurance. It provides a happier workforce. And what are the benefits of this right out of the gate is all the employees that enroll in this credit will see a raise in their paycheck and an increase in take-home pay. Because of the Section 125 plan, it actually reduces their taxable income. So an employee that's making $60,000 a year will see an extra $120, $150 a month in their take-home pay. So that alone incentivizes them. It's a great way for an employer to give all of their employees a raise, which actually without actually paying them more. And it also saves the employer on their FICA taxes. It saves the employer $324 a year per employee that enrolls. Now, what the program involves is it involves an employee that signs up. You need at least 15 employees in your company to sign up, and they need to complete one monthly activity. It takes about 5 to 10 minutes. Now, this activity can be, say you have an employee that smokes. It can be opening up the app on their phone and reading an article about the benefits of quitting smoking. That could be an activity. If you have an employee that's diabetic, going and getting their A1C checked, that's considered an activity. There's over 20 to 30 options every month for them to complete this activity. There's a free DNA test that tells them what foods, what things in the environment that they're allergic to, so they can have a healthier lifestyle. There's weight planning. There's just a bunch of stuff that helps them achieve a healthier lifestyle. And for $120 to $150, or even more if they make more than $60,000, it's well worth it for them to get that extra pay to go through that. And then the employer will see the savings on their FICA taxes when they run payroll the first month. And as the company grows, they'll only save more. And so that is the wellness tax credit. And last but not least, I'd like to discuss cost segregation. What cost segregation is it's a tax savings tool that's available to owners of commercial or investment properties. So commercial properties, if you own your company building, if you own an office building, if you own a hotel, if you own a strip mall, if you own investment properties, if you own vacation properties, if you have 10 Verbos, 10 Airbnbs, if you have a property that generates revenue through its tenants, cost segregation is a wonderful way for you to save on the income taxes from those properties. So the easiest way to explain cost segregation is the IRS knows, and this is to encourage the purchase of commercial or investment properties. The IRS knows that when you purchase a property, you're going to have to replace certain non-structural items of the building, the HVAC, the roof, repave the parking lot. And so these different aspects of the building are broken up into different life classes. And so what a cost segregation study does is it analyzes the aspects of your building that will eventually need to be replaced. And it categorizes this, and an engineered study is put together, and it shows you the amount of expense that you will hypothetically take should you need to repave the parking lot, put a new roof on, replace the lighting, replace the exterior windows. And you are allowed to take that expense, and I'm doing expense up front because you're not actually paying to get everything renovated. You're allowed to take that expense up front, which allows you to save on your taxes. Everybody knows, say you have a business, you have $1 million in revenue, you have $500,000 in expenses. If it's a pass-through entity, you're going to pay taxes on that remaining $500,000. But if you purchased a building and you have $300,000 in expenses from a cost segregation study, you're saving on, say, $100,000 in taxes by getting a cost segregation study done. The rule of thumb for a cost segregation study is right after your purchase is to get it done, definitely before you file your first year of taxes, because your CPA will do a depreciation schedule. Now, if you've owned a property for up to 20 years, we can still provide you a review and see if there's depreciation that can be accelerated that you can utilize on your taxes if you have an extension for 23, or if on your 24 taxes in April. The beauty of cost segregation studies, and why I love them so much, is that it's a fixed fee. The fees on the quote, typically a study costs between $5,000 and $10,000, but the ROI is often 20 to 1. So a study that costs $5,000 can save you $100,000. So it's a no-brainer. And from start to finish, a cost segregation study can take about a month to complete. It's very simple. We fill out a questionnaire. The home office will put together the quote. It'll have a fixed fee for the price and show you the potential tax savings, a low ball, a high ball. And then one thing that I also should have mentioned out of the gate, I work with your CPA. I don't work against your CPA. We need to utilize your CPA's tax planning expertise. What I do is I show you the benefit of these tax credit programs and how to maximize that. Your CPA is a vital part of this because every person's situation is different. You may be having a banner year this year, or you may be having the worst year of your business. So there's certain things that you can sit on, certain things that you can shelf, certain things that you need immediately. And so I work with your CPA to utilize their tax planning expertise to help it benefit you. So that's one thing that I should have brought up from the beginning is that we're all on the same page. We're all a team to help the client save money. I'm not trying to say, hey, you should have looked at this. Well, everything that I do is something that a CPA often does not have the bandwidth to do, or maybe they only have a couple of clients that really qualify. So it's not really in their best interest to stay abreast of all these programs and the constant legislation that's changing. And so that's where I come in, just to button all this up. As I mentioned, we can have a 15-minute conversation if you own a business or you have a client that owns a business, and I can say, all right, this they definitely could qualify for. All of our quotes are complimentary. It costs nothing to start the conversation, to just see what's available. And then, as I said, I'll give you the quote, you send it to your CPA, you and them have a private conversation, and then we just go from there. I think that is pretty much it.
Perfect.
How'd I do?
Thanks, Scott.
18
So
minutes. So that's not bad.
that was really good. And we
Okay.
already have questions coming in. So, like Scott said, we're going to be taking questions from here on out. So please feel free to use the chat or Q&A function on the bottom of your screen now to type in those questions. And to start off, we do have one question. Is a cost segregation study applicable to foreign properties?
Nope.
Okay. Thank you. It's
So
directly to the point. I like it.
yeah, not at all. It doesn't work at all. So yeah, it doesn't work for your private residence, but it works, like I said, commercial properties or investment properties. One untapped resource, if anybody has a connection, is people that own multiple Verbo or Airbnb properties. I am constantly trying to get in with not so, kind of influencers, but there's a online community where they're helping each other out. But that is just if you have investment properties, it's just a home run. It allows you to, instead of paying taxes, it also allows you to, with the tax savings, you can buy more properties. That's another benefit of it. But yeah, but it doesn't work for properties that are not U.S. based.
Perfect. Thanks for the question. Thanks for the answer, Scott. We do have somebody else asking if you could present your contact info, and that'd be great for people who may be watching this recording later who want to get a hang of you.
Sure, I'll pop that in the chat when. Yeah, absolutely.
Okay. And just by default, it just addresses the chat to hosts and panelists, so you'll just have to change it to everyone so everybody can be able to see it. A lot of
Okay.
people end up mixing that up. All right. Appreciate that. We have somebody thanking you for the presentation. Any other questions for Scott while we have him? Now is the time.
And we'll send out a follow-up email that'll have my contact information, obviously, and you can reach out. Everybody has thanks again for taking your time. So I noticed that a lot of people that take the time to be on these things, they have very specific questions, and they have one question that they wanted to get answered. So if you want to respond by the email, or I'd be happy to help you. I just really enjoy helping out people with these programs and saving them money.
Thanks, Scott. We have more questions coming in, which is great. I appreciate everybody asking their questions. You went over this a little bit. If you wanna flesh this out a little bit more for people, what exactly do you do? Do you help people apply for these credits?
Yeah. So so first and foremost, I present the opportunity, and then if the client or the business owner wants to proceed with a complimentary quote, Then I help in the information gathering. I utilize companies that specialize in these specific programs. So as opposed to you shopping around or going to different companies, I am the intermediary. I help fast track it. I stay on top of it. I help you with any questions. I'm basically your point of contact. So for instance, like cost segregation, the company that I utilize is called Cost Segregation Services Incorporated. They're located in Baton Rouge, Louisiana, and if you can guess by the name, that's all they do. They are the best in the industry with cost segregation. They've done 45,000 cost segregation studies in every state, and never had an audit. Their founder basically invented cost segregation and got it approved with the IRS. So as opposed to somebody buying a property, the CPA saying, hey, you should look into cost segregation, I don't have a contact, you Googling cost segregation, and all of a sudden you're inundated with 20 firms to choose from. I can help you with that. I can facilitate that, streamline it. I don't charge anything for my consultation services. The companies pay me a commission, so I don't charge you anything. I receive a compensation from the companies. I'll put my contact info in right now since people are asking for it.
Thank you, Scott.
Oh, sorry.
All right. Would you like to add anything to that answer, or you want to do the contact information first, or would you like to proceed to the next question?
Next question, please.
Perfect. All right. Thank you for the questions. Keep them coming. So the next question is for federal R&D credit. What is the limit for the number of employees?
Oh, there's no limit. The more the merrier. It's just so there has to be the federal income tax. Federal R&D is to offset taxes that the owners pay. So the kind of where it kind of the numbers don't make sense is if a company makes over $50 million a year and approximately like 500 employees, somewhere in that range where it gets like too big, it doesn't make sense. Normally those companies are no longer S corps. They change into C corps. So the R&D credit is so starting point 10 W2 employees, $2 million in revenue. The owners are paying taxes, pass through entity, and then it pretty much caps at $50 million in revenue, 500 employees, and it doesn't work for C corps. So it has to be a pass through entity.
Perfect. Thank you for the question. Again, another great answer. Next question we have, are these credits constantly changing all the time, or do they have expiration dates?
That's a fantastic question. Okay, I'm going to go. The wellness credit is that's not changing at all, and there's no change in sight. The employee retention credit that will expire in April of 2025. Currently, there's a moratorium on new business being submitted, but they just on July 21st, the IRS Commissioner Danny Werfel, he opened up processing low risk claims that were submitted before September 14th, 2023. And so there's still a window for ERC. We have until April 15th of 2025 for 2021 claims. R&D, you have 3 years from when the taxes were submitted, which is why I mentioned for 2020, if you took an extension, you filed your taxes in September and October. So we got a window. We got 45 days to look and see if you still qualify for 2020. And then for 2021, we have another year. So R&D is always a 3-year look back. But we can also apply it to current years. If you qualify for the current year, we can have an R&D study that your CPA can apply to your current year. If you just want to start moving forward and not do a look back. For cost segregation, I've done properties that have been purchased as far back as 20 years. I helped a fire extinguisher manufacturer that basically had a plot of land. It had 3 different buildings, and they basically just acquired buildings that were surrounding them. So they purchased them at different times. But we look at your CPA can provide you with what's called a depreciation schedule, which shows what's already been depreciated. And that and the 1-page questionnaire, we can accurately quote you what's left, what the meat on the bone that's available that we can still accelerate. So cost seg, we can go back as for properties that have been purchased 20 years ago, And that's an easy, that takes 5-10 minutes. So that's worth anybody's time to look and see if that's available. One thing about the Tax Cut and Jobs Act with cost segregation, the Tax Cut and Jobs Act provide bonus depreciation for properties that were purchased between September 27th of 2017 and December and to the current day. But the 100% bonus depreciation was from 9/27/17 to 12/31/17. So if you purchased a property between then, on top of what's already available to you from the cost seg, there's what's called a bonus depreciation on top of it, which makes it an even more valuable credit. If you purchase the property in 2023, it's 80%. If you purchase the property this year, it's 60%. And as I mentioned in the intro, there's the Tax Relief for American Families Act that passed the House. It's with the Senate right now. It reverses the R&D 100% QRE capitalization that I mentioned earlier, where it changes in 2022. That is with the Senate right now. To reverse that back to 100%. When that happens, if you're a business owner and you're involved in, you'll hear in your circles that R&D's back. Let's apply for R&D. And for the cost segregation, it takes the bonus that legislation that's with the Senate takes the bonus depreciation retroactively back to 1/1/23, back to 100%. So that'll be a big thing too, where people will jump on it. And consultants like myself, we have a list of people that as soon as this law gets changed, and it probably won't this year because it's an election year, but we'll see what happens. But that's another thing that is a service that I didn't mention, is that when things change, I'm reaching out to people that I keep lists of people that could potentially qualify, and you'll be the first on the list to say, hey, this changed. You more than likely qualify. Let's look into it, and that way you're the early bird gets the worm.
Perfect. Thanks for that answer. We don't have any questions in the queue right now, so I encourage anybody to ask a question now. This may be our last call, but in the meantime, while we're having people type in their questions, what would you say are the next steps for people who are interested, small business owners, on getting more information about tax credits? The contact, sorry, not to, sorry, the contact information is in the chat. Just look in the chat.
Shoot me an email. Let's set up a 15-minute time to talk, and we can go over your specific situation and what you're trying to achieve and whether or not it's worth your time. And I promise you, I won't. The 15 minutes, you'll either be able to move on to your day and know that you don't qualify, or we'll be able to fast track you and see what's available to you.
Perfect. Thank you. And again, the contact information is in the chat. It looks like that's going to be all of the questions we have at the moment, but I appreciate your time, Scott. If anybody has any questions for Scott, who's watching the recording or is in the presentation live now, please don't hesitate to reach out to him. And if you have any questions about your self-directed needs at any time, please don't hesitate to give us a contact at Camaplan via phone or email. We're always happy to help. And without further ado, I hope everybody has a great rest of their day.
One thing I would like to mention is that this is the perfect time to look into this. Once Labor Day hits, this was on their to-do list. So if you get it, we can really prioritize you now if you reach out now. So because this is kind of like the slower time in the year. Once the deadlines come up and you get that call from your CPA saying, all right, you're going to owe $100,000. What can we do? This is a great time to have that conversation and get a great start to it. So thanks again for your time. Hope you enjoy your lunch. I'm glad it only took a half hour.
Perfect. Thank you. Take care, everybody.